So let's
Perfect.
jump in first of all, Andy. Tell me what you know, what you feel like is the most urgent, actionable item for our airline pilots specifically about this Roth.
Yeah, the Roth Catch-Up is funny because I feel like we've talked a lot about it, and but we have to keep talking about it because
Yeah.
it's one of those like rule changes that sort of just slid under, but it was pretty impactful in terms of just the execution. Every airline seems to have taken a different approach, and custodian, so Fidelity, Schwab, seems to have taken a different approach in how to implement this. So they've taken a sneaky change and made it made it kind of complex.
Yeah.
But yeah, I think the big thing, Charlie, that we've seen for pilots is making sure that if you need to make a positive election, in other words, you have to go on to Schwab or workplace.schwab or net benefits for our Fidelity folks, that like
Yeah.
you have to go in there and make sure that you're set up so that once you start doing this Roth catch up, or I should say catch up, it's going to happen if that's in fact your goal.
Yeah. Yeah. Absolutely. Yeah, I think just to add on to what you said, it's rare that we have to go in to our 401ks at the airlines and make a positive election. And that means
Yeah.
most airlines, we believe, as best we can tell, if you don't go in and do something, you may not get any catch-up contributions.
Yeah.
And so I think we can't stress that enough because, like you said, it was a little sneaky, and we're just not used to having to go in and do something that. But I think it makes sense. And here I'm going to throw my theory at it because think about it this way: if you didn't have to go in and make a positive election, then that means you would get Roth catch-up by rule, by law, IRS regulation, and now your taxes just went up without you positively consenting to that. That's my theory, Andy. I don't know if it's true or not, but it kind of makes sense, when you think
Yeah.
about it that way. You got to go in and go, yes, I'm willing to do Roth catch-up, and yes, it will most likely make my taxes go up a little bit.
Yeah. Yeah, or at least stay the same because
Yes.
because previously you were getting that deduction
Yeah.
for taxes. And maybe we should just take a step back for our audience and just say, what is the catch-up rule in
Yeah.
general?
Good idea.
So if the idea here is if you're 50 and up, you can make an additional contribution into your 401k. So that's $8,000.
Mhm.
And then we've got super catch-up, so 60 to 63, which is 11,250 as catch-up contributions. That's in addition to the 24,500. We'll call that the 402G, the normal contribution limit. These are all 2026
Yeah.
numbers.
Absolutely. Yeah, great. And by the way, if you jump into that 11,250, if you're 60, you don't have to do anything different
Yeah.
except make sure your contribution rate is high enough.
Yeah.
And that's going to vary a little bit depending on your income. So
Yep.
we're finding that our captains, in general need to be 11, 12. Some of the unions are saying 13%. That's going to
Yep.
cover even the lower income, lower flying captains and some of the lower income first officers, I believe. So think about it in those ranges, if you will.
Yeah.
So awesome. Again, you've got to go in your 401k, whether it be Net Fidelity, Net Benefits, Schwab, retirement plan, and make the election. Anything else on that particular rule or rule change, Andy, that we can help people with?
No, I think there's maybe some mindset shifts there in terms of if you were doing Roth already, right? So like last year you were doing, so you're doing Roth and then you were getting tax deferral on the catch-up because you couldn't do Roth as catch-up in 2025 and earlier. Now that catch-up is all Roth, right? So if you were targeting a certain percentage between Roth and pre-tax, you've got to do a little extra math there to get those numbers right when you start taking into account the catch-up the catch-up
Yes.
component.
That's a
Yeah.
great point. That's a great point. For example, previously, let's say your goal is to be 50% Roth or let me say it this way. Your goal is to be half Roth and half pre-tax. Now that your catch-up has to be Roth, you got to go back and recalculate those percentages to keep that ratio the same. And so
Yep.
that's a little bit of mental gymnastics. You and I have thought about that mental gymnastics a lot, so we can kind of spit it out, relatively quickly. But if you're just now doing that for the first time, it requires a pen to paper at least to do some of that eighth grade math to go, okay, how the heck do I do this and keep the ratio the same, right?
Yeah, and it's it's definitely eighth grade math, but it's also like, we've tried to like create the flow chart and every time we're like,
Exactly.
what is happening right now? Like,
And trying to do this online with a client at the same time is mind blowing. It's like math in public.
yeah,
It's nearly impossible. So
yeah,
anyway, but give
yeah.
us a
It's,
call, email, and we will help with that eighth grade math because we've
that's
thought
right.
about it.
Yeah.
So
It's easy and hard. I
it
don't know how
is.
it happened.
It is. Yeah, it's weird. So that's important. Okay, I think we've hammered that. Now, I want to back up a second and say, look, you don't have to do this tomorrow. This is not like
Yeah.
stop what you're doing and do it right now. You've got some time because, the contributions are ongoing. However, we, especially at Southwest, I don't want to introduce confusion, but Southwest has a special requirement. You've got to fill up the 24,500 and then your Roth catch-up contribution starts. For
Yeah.
most people, that's not until spring, summertime. But if you're massively throwing money in there, you might need to do this in the next couple weeks, okay,
Yeah.
instead of the next couple months. All right.
Yes.
Hopefully,
Yeah.
I didn't confuse there.
Yeah, it's not, I think some folks are thinking it's like an open enrollment type of, like your deferred comp plans or
Yeah,
medical plans. Like it opens on January 2nd and closes. There's no closing.
there
The,
you go.
the closing, to your point, Charlie, is
Yeah,
just when you would start making Roth catch-up, you would obviously at that point need to have the settings correctly,
yeah,
set up within on your
there you go.
401k.
Absolutely. Yeah. And we'd love to help with this. I mean, the mechanics, we've seen the mechanics at all the airlines now, where the settings are, how to set the settings up. We've been going through that a lot.
Yeah.
Again, reach out to us, info@leadingedgeplanning.com. You can reach out to us directly, Charlie at leadingedgeplanning.com, Andrew at leadingedgeplanning.com. All the best. Stay disciplined, fly safe. We'll talk to you next time.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for decisions based on such information, and it should not be relied on as such.